What is going on, investors? Hopefully you guys are having a great day out there. Again, time to talk about Pinterest Incorporated, ticker symbol PINS. This stock is down in the after hours, down about 10% after reporting their Q1 earnings, which are warning on user growth amid reopening. So obviously we're seeing vaccinations and those type of things. And hey, that's great. Considering the year that most people have had, reopening is definitely good. But for a stock like Pinterest, maybe not as good as maybe like an airline or a cruise ship. So the stock is pulling back about 10%. Although when we get over the stock chart, we'll talk about how it's really just kind of pulled back to a level where we were like last week. So not at all a situation where I'd be really concerned. And look, it could have pulled back into a zone where we could potentially buy this one. So we'll talk about that when we get to Pinterest stock. Now, the stock sliding amid user growth on reopening. So when we get over the numbers, we'll look at user growth. We'll take a look at what's going on here and see if it's something that we really should be concerned about. Now, the first thing that I want to talk about here is we'll come into the balance sheet. We're basically monitoring this company based in the order that they show you on their financial statements. They kick things off with a balance sheet. So we'll take a look at that really quickly. Cash and cash equivalents coming in at $913 million. They got another $1 billion. These are in thousands. So yeah, you got another $1 billion in marketable securities. As you'd expect, this company's it didn't recently go public, but it's not a very old company, at least from a public company perspective. They haven't done any major acquisitions. They haven't really had any need to take on a lot of debt. So this is an asset-rich company. They've got over $2 billion here in cash in terms of total assets. Reminds me a lot about Google. Okay, they've got $2.7 billion in cash, and they basically have $2 billion sitting in cash. They've got 2.4 of that sitting in receivables and kind of prepaid expenses. Most of the assets in this company are basically cash. Okay, and on the liability side, you basically have nothing, okay? You have $363 million sitting here on the liability side. They have that and more in just receivables. So it's a sparkling balance sheet. I see why they kind of kick things off with that. Now, we've got our statement of operation. Look, this thing's sizzling too. We've got our revenue here. We've got 3 months ended back in March of 2020 and March of 2021. This is a company that's obviously benefited from people staying at home, wanting to redo spaces in their home. Different types of things, different recipes, lots of things when you stay at home. Pinterest can be really good. Now, look, here's the deal, though. Pinterest is really good for wedding planning, event planning, like going out with friends, fashion, those types of things. So I think even with the reopening, I think a site like this, look, it was doing okay before, and I think it still could thrive even as things reopen. Now, will some of the traffic kind of slide? Maybe some of the interest in the site kind of slide? Yeah, but it might be offset too the fact that you have more advertisers out there as well that have money that are willing to spend. So we'll see how that all balances out in the quarters and years ahead for Pinterest. Last year, you had 272 million in revenue. This year, you had 45. Boy, that's explosive growth. Not quite a double, but pretty darn close. Now, we've got cost expenses here. So we've got cost of revenue, research and development, sales and marketing, and this general administrative line. You're seeing all these numbers tick up pretty solidly. Okay, you'd expect that. Look, when you grow revenues this fast, you'd expect our total costs and expenses to grow too. And I tell you what, they didn't really grow that much. Okay, you went from 418 up to 508. That is not bad at all, and that gives us a loss from operation. This company is not profitable, at least from this quarter's perspective. They lost $146 million in the previous period. Now we carved that down and chiseled that down to $23 million. So you can kind of see here, while maybe some investors are kind of worried and why this stock may have sold off, okay? They're worried that, look, user growth is going to slow down. This is a great quarter for them, a great environment for them, and they're not profitable. So that's some things that you want to take away from this. Okay, so we've got $21 million flowing down to this net loss side. We'll pull that into cash flows is kind of weird with this company. I'll be honest with you. So we've got 3 months ended here. And I don't even know if cash flows are really great way to kind of analyze this company because, really from a statement of operations perspective is really where you're going to get a lot of visibility. But they do have a lot of stock-based compensation. It's weird. They have this big, gigantic non-cash charitable donations coming at $20 million. I mean, that's like half of this stock-based compensation. They donated a bunch to non-cash charitable contribution. Thought that was kind of interesting. They bolted on this accounts receivable. $270 million coming in from operating activities. So they're showing you that they printed a pretty big net loss number, but when you factor in some of this other stuff and add back it in, look, they had a phenomenal quarter from a cash perspective, from a cash flow perspective. In the previous period, we're at 57 million. So this is a phenomenal cash flow generating machine, as you'd expect. If you look at a Google and a Facebook, very similar story, okay? And everything else checks out from a cash flow perspective. Now, I want to zoom all the way back up here to the top of the press release. Excuse me why we kind of scroll up through here. Here's what I want to show you. So here's our Q1 highlights. This is actually really important. So we've got our 3 months ended here. We talked about the revenue, okay? Just phenomenal revenue growth. But they break it out in the different segments. So globally, which is international in the United States, as you'd probably imagine, is growing at 78%. Here in the United States, growing 65%. You got to like that. And international growing at 170%. Here's our monthly active users, MAUs. Globally, we're growing at 30%, but you see here in the United States, we're growing, and I say only, this is still probably better than Facebook probably at the current time, 9% here in the United States, but it is peaking, okay? I think like Netflix, like Facebook, these social media stocks and these social media companies that have been around for a decade or longer here in the United States are starting to see that their product is basically saturated here in the United States. Look, there's only so many people here in the United States that want to use a site like Pinterest. And we're seeing that user growth, at least from a monthly active user perspective, is at 9%. And I would actually expect that to kind of taper off or stay flat in the coming months. But look, you still grew revenue at 65%. So there's two sides of this business. You have the users on the site, but then you also have advertisers as well. And considering the types of ads that you can run on Pinterest, it could be that even with kind of stagnant revenue, monthly active user growth here in the United States, that advertisers are able to churn out lots of money. Now, this is an international story, similar, in my opinion, to Facebook, but also Netflix as well. I'm not trying to compare these companies at all, but from a monthly active user perspective and kind of where they are in their maturities, somewhat similar, because we're seeing much, much stronger growth in the international growth from 37%. Now, here's our average revenue per user, or ARPU or ARPU. Globally, it was up 34% from 77 cents to $1.04. Here's why the United States growth kind of stalling out or management getting kind of a little concerned about the reopening. It's because take a look, we're earning $3.99 on our average revenue per user here in the United States, whereas international, where I say only, but we're only earning 26 cents, although that was up 91%. So you gotta love that. Okay, we gotta love the international growth. We gotta love the international ARPU. If those trends continue, I actually think Pinterest is an interesting company and could continue to outperform other stocks in this sector. Now, we're seeing the stock, it was up here at 75, 76. We pulled back to 69. I'm going to tighten it up a little bit. Look, if we break 64 on this one, there's some room down here where this one can fall, and it could fall quickly. So I'd be a little concerned about that. Okay, this $64 level held here. It was resistance here. It held here. It held here. It held here. It's held 4 or 5 different times. I don't necessarily know, as if I was long Pinterest, especially at one of these higher prices, I'd want to see it tested again. Okay, because the more you kind of test this, eventually buyers could dry up. And this thing could break. And if it breaks 64, look, you could easily, in my opinion, come down to like $45. I mean, $20 could peel off this stock. Not saying that is likely or probable, just letting you know that that is a possibility if you break the 64 level. It is a critical level with this stock because you've seen, this goes back to November, like the start of this trend goes back to November of 2020. So this thing has been holding for like 4 or 5 months. It is a critical area. But we're basically in this consolidation area where we've had some blow-offs. Okay, this thing is blown up to almost $90 a share 2 different times. Could this be a double top and this thing could be reversing? That is possible as well, although I'm not necessarily predicting that as well. So depending on here's broadly how I think about a stock like Pinterest. Okay, personally, I wouldn't buy Pinterest if you weren't already invested in Facebook and Google. And you might ask why. Okay, here's my thoughts on the entire stock market in a nutshell. I think about the stock like the Olympics, okay? When the Olympics happens, they always have the opening ceremonies. We'll have the opening ceremonies with the Olympics here very soon. Now, hang with me. So all the athletes come onto the field, and we've got athletes from all the different countries out there. And I think about all those athletes like individual stocks. Okay, some of them are Pinterest, some of them are Facebook, some are Google, some are these companies you've never even heard of, or penny stocks are going to be delisted or go bankrupt. Now, if you were allowed to go out there and grab athletes that you were going to bet money on, or that you basically got their gold medal if they won one, would you go after Pinterest first or would you go after Facebook? Would you go after Pinterest first or would you go after Google? So that's the question I'd first ask, okay? If you're in Pinterest and you're not in Facebook or Google, I'd ask yourself, why is that? Why are you investing in a company that could win a silver medal or a bronze medal before you go out and invest in the companies that are for sure going to win the gold medal year after year, time and time again? So I'd invest in the gold medal winning stocks in the online advertising space first. That would be Google. That would be Facebook. That would also potentially be Amazon as well. Then if you want to build out that portfolio, invest in a Pinterest, invest in Snapchat, invest in some of these other social media stocks. By all means, I'd knock yourself out in that sense. But I would make sure I have pieces of the gold medal winning stocks before I came down to silver, bronze, and off the podium type stocks. So that's how I feel about Pinterest. I think we're pulling back into a range. If this range holds, can we pop back up here to 85, 86, 87, 88, 89? Sure. But we've just broken trend. We've got kind of a double top kind of forming here. If we break 65 on this, which is only $5 lower than where the stock trades right now, I'd be a little concerned, honestly. But if we come down here to 46, 47, 48, 49, 50, would I be way more excited about buying Pinterest? Absolutely, because when you looked at these financials, you've got strong growth internationally, not only on the monthly active user side, but also on the ARPU side as well. And the United States, while it's not growing nearly as fast as it once was, it's probably never going to grow like it once did. You still got strong ARPU growth because you've got a lot of advertisers out there that are monetizing this stock. So I like some things about Pinterest. It is kind of a wait and see stock. We'll see what happens with this one. We'll see how investors react to this one in the coming weeks ahead. Leave me a comment down below what you think about Pinterest. Hopefully you guys enjoyed this video. We'll be back with more again soon. Good luck with your investments.